Let us talk about how investments to increase your own portfolio by 10 times in different investments. There are several investment options are considered attractive for both short-term and long-term goals. But the best approach depends on your individual risk tolerance, financial goals, and time horizon. These are the recommendations to help you to understand and how to build up your own investment portfolio and invest in the long run. First, higher risk investments. Individual stocks. Buying individual stocks can offer high returns, but also carries the highest risk. It is best suited for experienced investors with the time and expertise to research companies. Growth stocks are stocks of companies expected to grow rapidly, offering high potential returns, but also high volatility, suitable for investors with a long-term horizon and higher risk tolerance. Small-cap stock funds. These funds invest in smaller companies with high growth potential, offering significant returns, but also increased volatility. Private credit. Investing in private credit offers the potential for superior returns, but it is typically complex and carries elevated risks. Second, medium risk investments. Corporate bonds. Bonds issued by companies can offer higher yields than government bonds, but carry a greater risk. Suitable for investors seeking income with a moderate risk tolerance. Medium-term corporate bond funds. These funds offer diversification within the corporate bond market and can be a good choice for investors seeking cash flow or looking to reduce overall portfolio risk. Dividend stock funds. These funds invest in companies that pay regular dividends, providing income and potential for capital appreciation, appealing to income-focused investors. REIT index funds. These funds provide diversified exposure to real estate without direct property ownership, offering dividends and potential appreciation. S&P 500 index funds. A diversified way to invest in large-cap U.S. stocks. These funds offer broad market exposure and can be a good choice for beginning investors looking for growth with some volatility. Nasdaq 100 index funds. Focused on the largest Nasdaq companies, these funds are suitable for growth-oriented investors, comfortable with higher volatility. Bitcoin ETFs offer easy access to Bitcoin, but they are subject to cryptocurrencies' inherent volatility. Third, low-risk investments. High-yield savings accounts offer a safe place to store cash and earn a higher interest rate than traditional savings accounts. Ideal for short-term savings or emergency funds. Certificates of deposit CDs offer fixed interest rates for a set period, providing predictable income, especially appealing in a potentially declining interest rate environment. CD ladders. This strategy involves staggering CDs with different maturities to provide liquidity and reduce reinvestment risk. It's particularly helpful in an uncertain interest rate environment. Short-term Treasury ETFs. These funds invest in short-term government debt and offer a safe haven with regular payouts, suitable for investors needing readily accessible cash. Money market funds. These funds pool investments in high-quality, short-term debt, providing a safer alternative to stocks or a temporary holding place for cash. Government bonds. Backed by the government. These bonds provide a predictable income stream and are considered very safe, though returns are generally lower than other investments. Please subscribe and like for this video.